There is a rumor spreading right now, quietly costing some retirees peace of mind and, in a few cases, real money. Not because the IRS actually limited how much you can keep in your checking account, but because people are reacting to a fake version of a real story and reacting the wrong way. Most have no idea which part is true and which part isn't. Here's what this video covers: why the checking account limit claim is false, what's actually changed with how the IRS tracks money moving through your bank accounts in 2026, and the one real new cost that's catching seniors off guard because almost nobody's heard of it. Stay to the end. That last one is quietly costing people the most, and it's the easiest to miss. Before we go further, untangling real rules from viral misinformation is exactly the job this channel exists to do. Plain English, no persona, no upsell. If that's useful, subscribe and turn on the bell so you catch the next one. It's free. Here's why this rumor is dangerous, specifically. No letter is coming to correct it. No agency is required to issue a public statement every time a false claim about them spreads online. So, when a rumor mixes a real dollar figure, a real agency name, and a real underlying anxiety about government overreach into your finances, it spreads faster than any correction ever will. And the retiree who acts on the fake version, moving money around unnecessarily or panicking over a non-existent rule, is often the same retiree who never hears about the real, smaller changes actually worth their attention. If you're thinking, I already saw this and did something about it just in case, there was nothing to protect yourself from, and no legitimate action was ever required in response to the version of this story that went viral. And if you're thinking, this doesn't apply to me, I don't move much money around, the real 2026 changes below don't care how much you move. They hinge on specific transaction types, not your overall activity level. Here's the part that should make you angry, in a useful way. Nobody profits from correcting a scary rumor once it's already got views. Understanding that gap between what spreads and what's actually true is exactly why you have to check something like this against a real source before it changes how you handle your own money. The first real thing: the Bank Secrecy Act's cash reporting rule, in place since 1970, adjusted by the Patriot Act in 2002. Not new, not from 2026. Your bank must report cash deposits or withdrawals of $10,000 or more to the federal government. This covers cash and cash equivalents, cashier's checks, money orders, foreign currency, not your account balance, and not ordinary checks or direct deposits. Splitting a large cash transaction into smaller amounts specifically to dodge the report is its own separate violation, known as structuring. This affects the retiree, who occasionally deposits cash from something like a car sale, just as much as anyone handling larger cash sums regularly. The catch: people confuse this narrow cash-specific rule with something broader threatening all their money, when it only ever applied to cash transactions at that threshold. The action right now: if you're depositing or withdrawing $10,000 or more in cash, know that a report is routine, not evidence of wrongdoing, and don't restructure your legitimate finances because of it. The second real thing: the feared $600 threshold for payment apps like Venmo, PayPal, and Cash App, which would have required a Form 1099-K for goods and services transactions above that amount, has been rolled back under the One Big Beautiful Bill Act. This affects the retiree who occasionally sells something online or gets reimbursed through an app, since far fewer casual transactions will trigger a tax form now. Separately, the threshold for Form 1099-NEC and 1099-MISC, used for work payments like small side jobs, rose from $600 to $2,000 starting January 1st, 2026, now adjusting for inflation annually. This matters if you do occasional consulting or part-time work alongside Social Security. The catch: because these thresholds shifted more than once recently, some tax software and preparers are still working off outdated figures. The action right now: If you received any 1099-K, 1099-NEC, or 1099-MISC this year, confirm it used the current 2026 threshold before assuming it's correct. The third real thing, and the one costing people the most without them realizing it, starting in 2026, under Section 4475 of the One Big Beautiful Bill Act, a new 1% federal excise tax applies to certain international money transfers made in cash, money order, or cashier's check. Send $1,000 in cash to a relative abroad through a retail transfer location, and the provider now collects a $10 tax on it. This affects the retiree sending regular support to family overseas just as much as one making a single transfer for a specific need. The catch: this applies specifically to cash-based transfers through certain providers. An electronic transfer from your bank account may not trigger the same tax, so the method matters. The action right now: ask your transfer provider directly whether your specific transaction is subject to this tax and what the current covered methods are. Before this week is over, do 3 things. 1. Stop worrying about a checking account limit. No such law exists. Full stop. 2. If you received any 1099 forms this year, confirm they used the correct 2026 threshold. 3. If you send money internationally by cash, money order, or cashier's check, ask directly whether the new excise tax applies, and weigh an electronic transfer instead. 3 steps, under an hour combined, closing the gap between a fake worry and a real cost. No letter is coming to tell you which viral claims about your money are false. The real rules sit quietly in tax law, waiting for you to check them directly instead of trusting a headline. That's not fear-mongering. That's simply how misinformation and real policy end up tangled, and untangling them is on you. If you know someone over 60 worried about a fake checking account limit, send them this video. You could be the reason they stop panicking over something false and start paying attention to something real. That's what this channel is here to do. In the next video, I'll break down the new enhanced $6,000 standard deduction for seniors 65 and older under the One Big Beautiful Bill Act, and exactly how to make sure you're claiming it correctly. I'll see you there.